Ladies and gentlemen, welcome back to the channel. We have a pretty special video for you today because it's been a while since we've done one of these. And what we're going to do in this video is I want to share with you my personal, this is a total personal thing, expectations for Tesla stock into the end of this year. Like when I'm sitting there by myself, no cameras on, maybe I'm talking to my family, what am I going to tell them is my expectation for Tesla into the end of this year, right? What is my personal expectation, okay? We've been dealing with a lot in markets that is finally, in my opinion, coming to an end. You can see even Bitcoin is positive. What? Say what? Positive 24 hours for Bitcoin? Crazy. Up around 0.5%. And some of these issues are resolving themselves. And we'll kind of touch base on that as well. But where do I think Tesla's going into the end of this year? Do I think we're going to have a year-end rally? What am I positioned for? That's what we're going to talk about in today's episode. I do also have a clip with you I want to share on CNBC. It's about 4 minutes long. Skip past it if you don't care what Wall Street says. I don't really care what Wall Street says, but I talked about this on Friday. I said that, watch, now you're going to get Wall Street that starts to come out and they're going to tell you to start buying the dip, right? Next week, it's going to be about buying the dip. It's going to be about getting long in this market again. My personal opinion, of course. But you have Oppenheimer here that says, quote, time to buy the dip as resilience remains evident through economic data. So we're going to look at that as well. I will share some key metrics with you for Tesla stock and exactly why I feel a certain way about Tesla and this market into the next 5-6 weeks or so. Do me a quick favor before we get into all of this information. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to take this a lot deeper than Tesla. Now, Tesla's like the easiest 10xer over time. If you want a relatively low-risk way to 10x your money, Tesla's great. But if you are looking for maybe a quicker 10x, maybe, stocks that are under the radar that Wall Street doesn't really know of yet, that's what we're doing in the trading community. In fact, last week, on November 14th, one company that we are invested in quite heavily, like $30,000, $40,000 invested in the stock. They raised guidance 400% on their earnings, and the stock really didn't react at all because the markets were crashing. We were in a liquidity slump, if you will, and we'll talk about that in today's episode. What happened? We had a decently good day on Friday. Small caps did well. That stock was up 46%. In this market, there's been a lot of stocks that have been decimated for no reason. And Tesla's one of them that are going to come back quite aggressively. So that's what we are focused on right now. Over the next 12, 24, 36 months, which stocks are really going to excel? Which stocks are going to 5 or 10x? Those are the opportunities we are targeting. Check that link out down below. With that said, let's get started. So, okay. I want to make sure we're all on the same page so we can drop this whole conversation. I'm going to give you the long story short version of this because we have a lot to cover in today's episode specifically pertaining to Tesla. The broader markets. We started a 41-day government shutdown. There was uncertainty during that period. How is the AI trade doing? Are we in an AI bubble? Was the talk of the town for a couple days there. Are we in a recession? That's kind of been a dark cloud over this market for a while. And the fact of the matter is we just got clarity. We're not in a recession. Jobs report was fine. There's been uncertainty continuing because the BLS keeps delaying the data. And it looks like we're not going to get some data for October because they can't retroactively collect it, apparently. Either way, we're getting enough data. We've gotten enough earnings to show this economy is doing fine. Most notably, Walmart. Walmart raised guidance. They said things are unchanged, really, from the consumer perspective in the last quarter. That is so important because Walmart is going to be the first company that tells you when shit is bad. Like, remember this forever. If you don't walk away with anything else from this video, remember this. When Walmart is scared, you should be scared. Okay? And Walmart is not scared. Walmart said, quote, they're pretty optimistic about the holiday quarter. Okay? Walmart said things are fine. The economic data we've gotten, like the jobs report, show things are fine. AI is fine, alive and well, better than expected across the board. Okay? There's been some weird things with like oracles, credit default swaps. There's been some weird anomalies here and there. But AI is alive and well. Economy is alive and well. Now, why did we not have a stronger week last week? With this new clarity, this uncertainty being alleviated from the AI trade, bubble fears, and economic concerns. Crypto, okay? Sorry to ruin the party for some people. The problem is in crypto. It's not the Japanese yen carry trade. When I started hearing that on Thursday, I'm like, it's possible, but typically you don't have the same crisis twice, right? You just don't tend to have the same problem twice that impacts the markets that much. Now, could that have been a factor at some point over the past week? Maybe. But it wasn't the driving factor. The driving factor is crypto. On October 10th, there was an issue with a stable coin. Okay? 400,000 traders were wiped out. They lost billions of dollars. Awesome. Great. Sucks, right? Normally, we should move past something like that. But there's so much leverage in crypto. It started a cascade event where margin calls led to margin calls, which led to liquidity drying up, mixed with the government shutdown, uncertainty around AI and the economy. It was kind of the perfect storm for crypto to have this cascading margin effect, right? Think about if everyone in the markets were tied to margin and it's like the price of this, stock market keeps falling, more people are going to get margin called. That's going to lead to more selling. That's going to lead to more margin calls. That leads to more selling, right? The cascade waterfall or snowball effect, right? Well, as of now, Bitcoin is actually positive in the last 24 hours. Could this change? Of course. But you're at a pretty important level. You're at kind of the areas where Bitcoin started to bottom at back in April. Psychologically, you've fallen from $126,000 per coin to $84,700 per coin right now. I think there's been enough of this cascading margin call effect to have washed out the problem at this point. Bitcoin fell almost 36% exactly from high to low. I think that's enough to have washed out the margin event that we were dealing with. Now, we can get back to business as usual. But what happens during these margin-like events, these liquidations, these liquidity events is really what it is. People stop paying attention to everything else. Just when margin calls lead to selling, that leads to more margin calls that lead to selling. It's almost like nothing else matters. Okay? So we've gotten clarity on the AI trade. We've gotten clarity on the economy. And as of Friday, it looks like the Fed's going to be cutting rates in December. This is now the perfect storm for an upside rally in markets. Even some individuals, firms like Citadel, calling for 700 on the S&P by the end of this year. Okay? Assuming the crypto situation is resolved, you are looking at an exponential rally, in my opinion, into the end of this year. One of those rallies where Wall Street just is not positioned. They're not ready for this. They don't capitalize on this. And it leads to a chase, right? A chase is one of the best rallies to be in, because just when you think it's going to stop, it has to stop, right? You get another leg, and then another leg. I've seen it time and time again. It tends to happen towards the end of the year in most years, and I think that's about to happen again. Now, specifically for Tesla stock, Tesla was an outperformer on the downside, and I think it's going to be an outperformer on the upside in simplest terms. But we are going to have some catalysts over the next 6 weeks or so. Elon Musk, on their last earnings just 2 weeks ago, said that they were targeting 8 to 10 cities for robotaxi operations. We've seen validation testing vehicles like in every corner of this country. The only thing slowing Tesla down at this point is from a regulatory process. And I think we could start seeing rapid deployment of robotaxis in different areas and cities of this country, even over the next 6 weeks. Okay, so I think we're going to get a couple more cities that start operations, probably a couple more in early 2026. I don't hold too much weight on 8 to 10 cities by the end of this year. I don't think you need that. I think you need another city or two, and Tesla stock is going to be in the 500s, right? Even then, during this crash event, this liquidity event in markets that started on October 10th, that has cascaded ever since, Elon's compensation package was approved on November 6th, right? We've had good news for Tesla that has not been reflected in Tesla stock. Yeah, sure, it's done better than other stocks. It hasn't fallen as much as other stocks, but you haven't seen the upside appreciation in Tesla stock the way you would have seen, okay? Well, now that these issues are clearing up, I think there's a lot of, let's call it, pent-up demand for Tesla stock. From a technical perspective, you want to get above that $432 area. That's where your 20-day moving average is. That's also where your 50-day moving average is. Now, I also think that we are not in an AI bubble. That is one of the most ridiculous things I've ever heard before. And I think the next year is really going to be a year of AI application, right? It's going to be a year of, let's not talk about AI, let's actually do it, right? Companies that, unfortunately, like nuclear or quantum, I'm not super excited about next year, because I think it's going to be more of, again, let's show what we're doing. Let's start bringing in some revenues. Let's capitalize on this opportunity. And a lot of companies are still in the, it's going to be years before we're generating revenue, right? I would be careful of those areas. Something like a Tesla is breaking into brand new industries like robotaxi and Optimus that have total addressable markets in the trillions of dollars, right? Almost endless opportunity. That is their market for the taking. Okay. And that, I think, is going to attract a lot of investment next year. So I'm really, really excited about next year. I think we can actually start to see the consumer getting better, the balance sheets of households getting better. There's a lot of provisions from the big beautiful bill that kick in next year. If real estate can really start to pick up, that could unlock a lot of equity, take equity in homes and bring that money to people's bank accounts as they can start to sell their home and buy new homes, right? There's a lot to be excited about next year from a basic econ level. But I think Tesla is going to be one of the big, outperformers of next year, right? One of those companies that doesn't just talk the talk, but starts to walk the walk, okay? And I think between now and the end of this year, you probably see a lot of positioning into Tesla again, because something that we started to see happen was Tesla, again, outperforming. But the reason for that, I believe, is hedge funds and institutions are just trying to get to like a market weighting in Tesla. Remember back in the day, we used to talk about this more, but Tesla and Apple were the most underweight Mag 7 stocks, right? People were overweight Google, they're overweight Amazon, they're overweight Microsoft, overweight Nvidia, but underweight Tesla. That just means if the S&P is 5% in Tesla, then hedge funds and institutions maybe are 2% in Tesla or not in Tesla at all, and they're in an additional 5% in Google, let's say. That's what it means to be over or underweight a stock. Well, Wall Street has been underweight Tesla for so long. I think people are institutions are going to get market weight with Tesla again, right? And that in and of itself is quite a lot of buying pressure. Now, we have Elon's compensation package. Last time we had a compensation package for Elon back in 2018. It was a really good time to invest in the stock. And you now have, again, even more to that point, Elon that is working to create shareholder value in Tesla, right? Elon Musk just actually hinted today that FSD V14.3 could actually have some breakthroughs to it. Now, Elon already kind of knows what FSD V14.3 is going to look like. And we're getting closer to that unsupervised full self-driving moment. Elon says that is when the next big value creation happens for Tesla, and that could very well be next year. Now, next year, you could be looking at Tesla as high as $1,000 per share, in my opinion. Between now and the end of this year, we could easily see Tesla a $500 stock, right? I would be surprised if Tesla is not a $500 stock to end this year, okay? Because of what we've talked about in today's episode. I think there's a lot of short positions that have grown in Tesla. Short interest has went from about 3%, 2.5% to 3.25%. Doesn't sound like a lot, but that's an increase of 7-ish million shares sold short, and there's 77.5 million shares sold short. I think once this market really starts to turn around, which could be this upcoming week, there's going to be a lot of people that want to cover on that Tesla short position, right? Tesla has been an outperformer, and I think it continues to outperform, especially once we break the technical levels around that 430 area. Then you could start a pretty aggressive move to the upside. Now, we have big data events coming on December 16th and December 18th. We have the Fed meeting on December 10th. But assuming things go kind of in line with where the markets are currently expecting, markets are expecting a rate cut. We think the economy is doing okay, not great. I assume that's probably the confirmation we get from the economic data. Seems like the Fed wants to cut rates at this point. And that in December should help further the rally for Tesla. So again, I would be shocked if Tesla's not a $500 stock by the end of this year. And then you could easily see a double next year in Tesla. Okay. $900,000 a share. It's not out of the question next year at all. So those are kind of my expectations. Just, based on markets being underweight in Tesla, all of the good news that has accumulated during this market crash that people have not really paid attention to, the addition of short positions that is going to fuel the upside a little bit more, and Elon's now the CEO. He's now working to create shareholder value. That's not something you want to fight against, okay? Now, before we go ahead and wrap up this video, again, share your thoughts on where you think Tesla stock is going to be by the end of this year. I do, again, want to share this clip with you. It says, time to buy the dip as resilience remains evident through economic data. Take a listen.
Strategist at Oppenheimer is joining me now. Okay, so where are you looking for the opportunities amid all this bubble talk and, but the roller coaster that is the market right now?
Well, great to be on the show with you today, Contessa, especially on really where the Fed has been so kind to us, Great to hear from the New York Fed and from the Boston Fed today and see the market rally the way it is. We think, where we stand right now, it really is opportunity, not so much to buy the dips wildly, but rather to focus on the babies that get thrown out with the bathwater, those really great stocks that for the moment get thrown down like hot potatoes onto the floor by the traders, the short-term aggressive investors, on any excuse to sell without FOMO. in a bull market that continues to appear to be very much intact. So we continue to like infotech, communication services. We like industrials. We like financials. And yes, we do like consumer discretionary. We have been, for a long time, we're recommend cyclicals over defensives. That's worked out now for years, as well as for this year itself. We think volatility, part of the story. The big issue is, will the Fed indeed cut in December? We think it does 25 basis points. We call it another down payment by Jerome Powell to let both Wall Street and Main Street know that indeed the Fed is in the process of ending the Fed funds hike cycle that started in March of 2022. So far, what do we have? We have 3 cuts from last year, 2 cuts so far done this year, with 1 more likely to go. We can't help but think that this will, in effect, just lets people know that it may not be lowering rates as fast as many in the market want, particularly leverage players on Main Street, whether it's real estate or people just looking for lower mortgage rates. But we think overall, the resilience in corporate earnings is as shown by the S&P 500, thus far remarkably good, powerful, with a domination of earnings growers versus, I think, just 1 or 2 negative earnings growers among the sectors, among the 11 sectors. And they're to be expected with energy, based on the fact that we're awash oil around the world. But the rest is very good, and so we think stocks have time to move up and heal from the wobble that it had over the course of the last 10 days.
Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. The big thing I'm watching over this weekend is what happens with crypto. Okay, do we see the margin call cascade end? I believe it's to the point where it's washed itself out. If it's not quite there yet, then that becomes the issue for next week. Crypto and the markets are going hand in hand right now. It would be much the same way if the markets were having an issue, a banking crisis, or what have you. It would likely pull Bitcoin down as well, right? This time it's crypto having the issue that has been pulling this market down, and it's really gotten amplified in the last couple of weeks. But I do think it's coming to an end, and I think all of the good news paves the way for quite a rally in Tesla stock into the end of this year. Probably some kind of correctionary, pullback, sideways consolidation in Q1 2026, and then a pretty aggressive rally in the second half of next year as well. So yeah, that would be my kind of game plan. That's what I would tell my family. That's my expectation. Let me know your thoughts and your expectations down below in the comment section. Hit the like button, subscribe to the channel if you have not done so already, and check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.